morning guys, just a little summary of the bubbles and how they work and what we're going to do, the new plan ahead. So I think we can get rid of that, we don't need that now because we've got a SLTP in place. So why did we get the AJ sell, or why would we have had the AJ sell? It's fairly simple in so much as that at the FX open, all the bubbles are aligned on this axis and they just sit there, and then when the crowd move, well, then we'll get the set up. So here's Aussie, that they were net long, we're above 50%, so at 50, and they've gone long, they added. So it was a sell, but it's more of a sell, okay? And then they shorted the yen. However, ideally we'd want the yen below 50%, but it looks like it may gravitate down. But we're interested on this. We're interested on this. This is the time part, okay? This is the positioning across time. So the reason for making this video is that we're gonna put in a change on the bot. Before we were using time intervals. That was a way of mitigating risk. So we'd open up the trade at a particular point in time. We'd open up, like, say, 1 o'clock in the morning, 6 o'clock in the morning, 1 o'clock in the afternoon, 6 o'clock in the evening. And it was a little bit random. So what I'm going to do, might be slightly risky, is at the moment the bubbles deviate, we'll have the signal. So for example, we would have had the setup on Aussie USD at some point, because we can see that we've made a movement on the dollar, we've seen that we've made a movement on the Aussie. So, you know, if we come to Aussie USD, we would have captured it at the moment the bubbles deviated. So the bubbles close at the FX open, which is, you know, 10 o'clock midnight. Okay, so look at that, right? 10 o'clock midnight, 2 o'clock in the morning, 4 o'clock, 6 o'clock, boom. And we would have netted a lot of profit, a ton of profit from that bubble deviation. So the moment we get the deviation, it will trigger a trade. Now the risky thing is that we're going to have load and load of trade setups. So we'll have to have a look at that. We can have a max symbol per account, which might be an idea, because what I've got a feeling, we come to the, we're probably going to have lists and lists and lists of trades. So we probably want to mitigate that and have it like 10 max trades, which is a really good idea, to be honest with you. Obviously these were done too late because I'm just testing the connectivity. See the time, 11 o'clock in the morning. We wouldn't have done it at 11. We would have captured it at 2 o'clock in the morning. However, this new idea is quite new in so much that we're going to trade the bubble deviation the moment it happens. So if we come to the macros, send signal per change. So that's it. It triggers whenever we have the bubble deviation. It's like, right, okay, some movements happened in the retail space. Has to think about it, and then off we go. And the reason why we have yen Aussie is because of the way that it understands the parent trade, like the common denominator. So we wouldn't trade dollar euro, we trade the euro dollar. Okay, so that's why that is. So we have the max deviation. It will know it's one or the other. Okay, so, you know, we don't trade dollar pound, we trade the pound dollar. Okay, so that's the reason for that. So whenever we have any deviation on this vertical line, we're going to open up a trade. So let's say theoretically Kiwi Swiss, right? So we're looking for Kiwi Swiss for a sell. Right? That's weak, that's strong. I don't know. Let's have a look. Indices, FX, New Zealand dollar, Swiss. Yeah. I mean, what's that time? We would have opened it up at 2 o'clock in the morning. And we have really fallen since. Likewise, let's see, pound CAD. Okay. See pound CAD. Down. That time. Oh, that might have been that. I think this would have been bad. That might have got us stopped out potentially. And we can't have 100% hit rate. That's the trouble. 2 o'clock in the morning. What's that? We might have been alright. It's not that wide. We might have been okay. We would have probably captured that, which is pretty bonkers. So far so good. So that's what we'll do. If it does open up at too many trades, which I think it will do, we'll have a cap on it. We'll have a max limit, and I'll just create an EA to say don't open up any more than 10 trades because 10 is more than sufficient, really. And then that's what we'll do. I'll report back over the course of the week with this. I'm also testing on MetaTrader 5, and we've got a new funky dashboard which I want to incorporate sentiment on top of this because this is purely technical, and I want to add an additional column to say sentiment. And if we have massive success with this and the bubbles, we'll combine the two, and we'll have probably one of the best robots, out there for retail trader consumption. It should be phenomenal. If we get success on the technical and the sentiment, we combine the two, it's going to be absolutely extraordinary. So stay tuned with it. If we do open up too many trades here, we'll just put a max cap on it, and these may go to our stop loss, but they're basically just they're just test trades to see, for connectivity, because we're connecting the EA to the sheet, and then it's replying back with the data, and then it's opening trade. So I'm not going to be too surprised if we get to stop loss, but that's fine because these are test trades, and then we'll just see how we go over the course of the week and weeks to come. And I'm quite excited by it. It could be really good, especially from those examples I showed you on pound CAD, Kiwi Swiss, Aussie USD, and Aussie Yen as well. So it could have been really, really profitable day for us, but we'll have to wait and see. So I'll speak to you guys soon.